In February 2022, the world watched as the US and Europe pulled the trigger on what they believed was the most powerful financial weapon ever used in modern history. Leaders were certain this would crush the Russian economy, collapse the ruble, and force Putin to his knees. But then something stunning happened. Russia didn't fall. In fact, it adapted. It rerouted trade, built new systems, and started something that no one in Washington ever expected. And when other nations saw it, they quietly began preparing their own moves that now threaten the very foundation of the dollar's global power. Make sure you watch until the end, and don't forget to subscribe so you never miss the stories reshaping the global economy. In late February 2022, as Russian troops crossed into Ukraine and the world watched war return to Europe, something just as historic happened behind closed doors in Washington and Brussels. It wasn't a tank, a missile, or a diplomatic threat. It was a keystroke. A single devastating financial weapon the West believed would cripple a nuclear-armed nation without firing a shot. In more than 200 countries, it's the invisible infrastructure that moves $5 trillion per day across the global financial system. Oil payments, trade finance, cross-border banking, corporate settlements, everything. Cutting a country off from SWIFT is like shutting down its economic bloodstream. No payments in, no payments out, no access to global trade. It was supposed to be the financial nuclear option, the move so powerful that economists believed it would crash the ruble, break Russian banks, starve the Russian economy, and force Putin to retreat. That didn't happen. Yes, the ruble fell for about 2 weeks. Yes, Russian banks panicked. Yes, the shock was enormous. But within months, Russia was not just surviving, it was adapting. The ruble stabilized. Energy exports surged, trade rerouted. The most unexpected twist of all, nations around the world began questioning whether the global financial system was truly global or simply American. Because cutting off Russia from SWIFT didn't just punish Russia, it transformed SWIFT itself from a neutral network into a geopolitical weapon. Once that happened, hundreds of billions of dollars in global trade started shifting toward alternatives. But to understand why this decision could end up weakening the dollar more than Russia, you have to go back, not to 2022, not even to the Cold War. You need to look at the last 4 times a dominant power weaponized global finance, and the same 5-stage pattern that followed every single time. The story starts in 1914, when the British pound was the world's reserve currency. London was the center of global finance. British banks were everywhere. Britain used that financial dominance to punish enemies and reward allies. But then something strange happened. Countries that relied on London, France, Germany, Russia began building their own gold settlement systems, their own banks, and eventually, their own currencies. The pound didn't collapse overnight, but its supremacy did, not because Britain lost power militarily, but because it weaponized its financial system so aggressively that other nations lost trust in it. The second time this pattern appeared was in the 1940s. The United States emerged from World War II with the world's largest economy and largest gold reserves. The dollar became the backbone of global trade. But after the war, America began using its financial dominance to pressure countries politically freezing assets, controlling access to dollars, dictating trade rules. Nations accepted it at first, but by the 1960s, countries from France to Japan began looking for alternatives. That loss of confidence triggered a run on U.S. gold and forced Nixon to end the gold standard in 1971. The dollar survived, but the trust underpinning the system fractured. Then came 2000. The world was now fully globalized. The U.S. controlled the digital financial rails. SWIFT, CHIPS, FedWire. After 9/11s, America began weaponizing that system to track terrorists. But soon it wasn't just terrorists, it was entire countries. Banks, corporations, eventually, anyone the U.S. considered an adversary. The financial system became a tool of geopolitical pressure, and then came Iran. In 2012, the U.S. and Europe pushed SWIFT to cut Iran out of the global banking network. Iranian oil exports collapsed. Inflation exploded. The government barely survived. But the message the rest of the world heard was different. If they can do this to Iran, they can do it to anyone. China certainly heard it. So did India. So did Brazil, Turkey, Saudi Arabia, South Africa, and dozens of countries that quietly began building their own systems, just in case they were next. And that brings us back to Russia in 2022. The US and EU believed cutting Russia from SWIFT would trigger total economic collapse. Instead, it triggered the largest wave of financial diversification in modern history. Russia rerouted energy sales through China and India. Gas trade moved to yuan and rupees. Banks connected to China's SIPs, Beijing's alternative to SWIFT, and within months, Russia built a parallel financial system strong enough to survive. But the real story, the one that truly threatens the dollar, unfolded outside Russia. Dozens of countries, including US partners, began asking a terrifying question. Why should America be able to turn off our economy with one phone call? The answer was even more unsettling, because they built the system. Because the dollar is the backbone of global payments. Because SWIFT runs through Western regulators. Because global finance is not neutral, it is infrastructure controlled by the world's dominant power. So countries started moving. Saudi Arabia began settling oil trades in yuan. India pushed for rupee trade with Africa. BRICS expanded into an economic bloc representing 40% of the world's population and 30% of global GDP. China accelerated SIPs. Russia expanded SPFS. France and Brazil signed currency cooperation deals outside the dollar system. Even Europe discussed a digital euro designed to reduce reliance on US payment rails. In other words, the SWIFT cutoff didn't isolate Russia. It accelerated the world's move away from the dollar. Because here's the pattern history keeps repeating. When a dominant power weaponizes its financial infrastructure, it wins in the short term, but loses trust in the long term. And once trust cracks, alternatives rise. It happened to the British pound in the early 1900s. It happened to the US gold standard in the 1960s. It is happening right now to the US dollar. Which brings us to the most important question. What does this mean for the next 20 years? Look at the data. The share of global reserves held in US dollars has fallen for 20 straight years. The share of world trade conducted in dollars is declining. More than half of the world's population now lives in countries building alternatives to SWIFT. Gold purchases by central banks are at their highest levels in modern history. In China, the world's largest trading nation is pushing for yuan-based settlements at a pace that would have been unthinkable a decade ago. This doesn't mean the dollar collapses tomorrow. Reserve currencies don't evaporate. They erode. Slowly, then suddenly. But we are deep into the slowly phase, and the SWIFT cutoff pushed us further down the path than anyone expected. Because the moment the US used SWIFT as a weapon, the rest of the world stopped seeing SWIFT as neutral. And once neutrality is gone, dominance becomes temporary. What happens next? That depends on how fast the alternative systems mature. How aggressively China expands its financial infrastructure. How much more the US weaponizes its own system. And how many countries decide they no longer want their economic futures controlled from Washington. But one thing is clear. February 26, 2022, will be remembered not as the day Russia was weakened, but the day the dollar's future was quietly rewritten. If you want to understand the financial patterns shaping the next decade, and the signals that most people are missing, stick around. This story is just beginning.